Hey guys, how's it going? Dustin Pass here. I hope you had a great weekend. Today I want to give you some insight as to what we look for in an insider trade opportunity, but I'm not talking about the actual insider side of it. All right? I'm not talking about how many insiders they were, how much they put in there, or those kind of things, or are they a first-time buyer? Those are all good filters, good stuff we use, but there are a lot of other factors. And what I'd like to do is I want to walk you through kind of the anatomy of us selecting a trade. The things we consider, what we're looking at. And the best way to do that is just to break down an actual trade. So I'm not a fan of pot stocks or the industry really, but excuse me, there's been so much hype around this sector over the last couple of years that I was bound to hit my team's radar eventually. So as more states and provinces, they legalize it, the market's growing, the profit potential is growing as well. But this investment space, I believe, is very risky. And for the most part, like I said, I stay away from it. Most of the major players, they're still reporting pretty weak numbers. And I want to look at a few. So we're going to look at Canopy Growth. Canopy Growth. Here we go. CGC is the ticker symbol. Now, last year, the company generated total sales of around $68 million. Now, after expenses, they lost $108 million for the year. Yet the company's worth over $10 billion. I can't make this stuff up, guys. What we're seeing in this industry is a lot of hopes and dreams and a lot of marketing. A lot of marketing. A new company comes out. They have an amazing marketing team. Stock jumps like crazy. And before you know it, reality sets in, right? The numbers come in and it's clear. It just can't support it. And then they have another big marketing push. And then eventually, like I said, reality sets in. The revenue's not there. And then you end up with a product that's way down here, a stock that's valued less than it was when it first came out. So we see this over and over again. Let's look at another example. This is ticker TLRY. Tilray is the company, all right? It brought in just $22 million last year, yet they valued the firm at $13.5 billion. You really can't make this stuff up. 613 times its total sales. What planet are these people from? Anyway, the stocks that I just went over, along with most of their peers, most of the stuff in this industry, they've got these pumped up prices. It's all based on hopes of profit to come. And only time will tell if today's valuations are in fact justified. But that being said, last October, there was a company named Innovative Industrial Properties. It came up on my research team's radar. It is to the marijuana industry what Levi Strauss was to the gold rush. All right. So if you guys know anything about history, you had all these men, they were risking their lives in search of gold back in the 1850s. And we had Levi Strauss, who made a fortune selling them dry goods and riveted pants, right? And IIPR has taken a similar approach. Instead of trying to be the Philip Morris of pot, they lease land to the optimistic and the well-funded, hopefuls. They own and manage a lot of specialized industrial properties, and then they lease these properties to state licensed operators for their, cannabis facilities. Now, if you think about it, they're selling blue jeans, right? Instead of mining for gold. It's a lot less risky. It's more transparent. And so far, it's been a lot more profitable. In fact, let's pull up the chart here. Now, when this company came across my analyst's radar, it was right around in October of last year. All right. My team believed that it would expand significantly. At the time, it was already in 7 states, and as more states passed legislation legalizing the practice, it made sense that it would also expand into those other states. At the time, there was 31 states that had legalized cannabis for either recreational use or medical use. And as you know, public opinion is starting to shift in favor of its use. But the growers have a roadblock, right? And the biggest of that would be access to capital. Most lenders, especially major lenders who can get them the kind of money they need, they're not able to lend to these companies because of federal banking regulations. Being legal at the state level, but illegal at the federal level, there's this big gray area. And that's kind of where this company comes in, IIPR. Without the borrowing power to build grow facilities, these major pot players, they've got no choice but to lease from legitimate enterprises like Innovative Industrial Properties, right? And here's the good thing about this company. Unlike the gold rush darlings of the pot bubble, who were all running on hopes, dreams, investor cash, IIPR was profitable, all right? It paid a dividend, and it traded at far more reasonable 2 times book value. So you can see kind of like when we look at a stock, it's not just what are the insiders doing? It's how does this stock differ from other stocks in the industry? What does the industry look like? Do we want to touch this industry? There's a lot that goes into it. And that's kind of what I want to do is show you what we're looking at. In addition to what I just told you, this particular company had 9 properties, almost 1 million square feet of rentable space, and it was all leased out, no inventory. And so there was one kind of chink in the armor upon initial review of this stock, and that is like, what happens if the banking laws change and it opens up capital markets to these pot proprietors? Well, what we found was that this particular company had made that risk obsolete because they don't actually build sites first. They're not creating inventory. They're not trying to sell stuff they have. What they do is they approach companies and they buy the properties from the growers, and then they lease the space back to them. And they're doing this on a triple net basis. All right, so they're actually making the tenants responsible for all the operating expenses. It really is a brilliant plan. And of course, this all obviously had the added benefit of increasing profit margins, since expenses, they grow at a slower rate than rent rises. But at the time, they were also in negotiation to acquire another property in Colorado, and this, of course, was going to expand their footprint even further. So the stock had already doubled over 12 months when we found it. But the October sell-off that we see right here, this delivered an opportunity right to us. In fact, the insiders are the ones who alerted us to that. All right, so we didn't even know about this stock. It wasn't even on our radar. We're not looking in this industry because this industry, as I said, it's not something I'm interested in. I'm not a fan of it. And in transparency, I didn't get involved in the stock. Again, it's just not something I support. But my analyst team did find it, and it was added to the insider alert. We found it through the Form 4. You guys hopefully have heard me talk about Form 4s. If you have not, the Form 4 is the most valuable piece of paper on Wall Street. You've probably heard me say that if you've watched my videos, and if not, I'll probably say it a lot more before all are said and done. This form is a piece of paper that has to be submitted every time an insider purchases their own stock. Now, there's thousands of them that come out per day. Most of them aren't worth looking at. It's a bunch of data mining to get this right. But the truth is, if you know how to call through them and filter them, you can find some amazing opportunities. First off, we have Gary Kreitzer. Gary bought 32,000 shares in October, on October 4th, in fact. You can see he paid $40 a share for it. So he paid market. All right, it's not like a special deal. He didn't get it from the company. He went out with his own money and he bought the stock. But more impressive than that, we have Alan D. He is actually an executive chairman who bought over 300,000 shares at market price, almost $3 million worth, $2.7 million, all right? Right around $40. Now, when we had spotted this stock, when my analyst found the stock, it wasn't long after. It was the end of the week, and it was maybe 1% above where the insiders got in, which gave us an amazing opportunity. So, of course, my team issued a buy recommendation on this back in October. Since that buy recommendation has been added, it has just gone up and up and up. And let me just expand this thing out all the way because it keeps going for a while. So we got in down here. The thing went up almost 250% before it finally turned. And we took a boatload of profit out of this, had a little bit riding at the end, and held that, and then it hit our stop as it fell back down. Still made well over 100% on the final stuff. But that is kind of the anatomy of the trade. That's some of the stuff that we take into account when we're looking at taking on a new trade for the insider report. We're looking at the industry. We're looking at the financials of the company. How do they set themselves apart? We even look at the executives, the board members. Are they sold out to the cause of the company? There's a lot that goes into this. But I wanted to give you a look inside. Now, here's the thing. We just closed out the last portion of that, and we're going to take the profits from this trade, the team is anyway, and they're going to roll that into another stock. We've got another stock that has a ton of insider trading. It just hit our radar. So in the next video, what I'm going to do is I'm going to put together a video, and I want to show you how you can use insider data to identify different sectors to trade in. And from there, we're going to look at a stock, or the data on a stock that we're rolling money into that ultimately is within that sector. So if you want to learn more, though, you don't have to wait. You can actually register below. There should be links below this video that will allow you to register for an on-demand webinar. Now, they start every 15 minutes, so just click the link, put in your name, email address, select the one you want. If you can't attend right now, that's okay. there is an option to choose one out in the future. And if you do that, I just want to say there's a checkbox that says send me a reminder text. Make sure you do that. Life gets busy. We get preoccupied. We forget about these things. And I'd hate for you to miss out on this opportunity, because in that video, we're actually going to break down a whole lot more of these examples and tell you how you can get your hands on 3 that are happening right now. So pretty exciting stuff, guys. Click over, register, enjoy the rest of your day, and I'll see you in the next video.